Ladies and gentlemen, good day and welcome to KPR Mill Limited Q3FY22 Earnings Conference Call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Prerna Jhunjhunwala from Batlivala & Karani Securities. Thank you and over to you, Ms. Jhunjhunwala.
Thank you, Nirav. Good evening, everyone. On behalf of B&K Securities, I would like to welcome you all for 3Q FY22 results conference call of KPR Mill Limited. From the company, we have with us the senior management including Mr. P. Nataraj, Managing Director of the company, Mr. Murugappan, the CFO, and Mr. Kandaswamy, the Company Secretary. I would now like to hand over the call to the management for initial comments. Thank you and over to you, sir.
Thank you, Prerna. Very good evening to one and all. I welcome for the KPR Mill third quarter earnings call for the financial year 2022. We take pleasure in reporting a good performance for the quarter ended 31st December 2021. The textile business continues to be good. The historical high demand for cotton resulted in high demand for yarn as well, due to which the yarn prices have also gone up. Garment orders remain healthy. New garment factory at Tiruppalli near Tirupur commenced production during the current quarter and ramping up of full capacity is expected during next financial year. The establishment of new ethanol cum sugar unit is in progress. As regards third wave of COVID pandemic, unlike the first two waves, Indian business has managed to tackle the current rise in infections with ease and ensure relatively less disruption to the business. With the sustained support from the stakeholders and the employees of the company, its impact on the KPR business is negligible. With the proactive government policies and rising global demand, India's textile and apparel sector is heading for a bright future. With this remark, now the floor is open for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Kapil Jagasia from Edelweiss. Please go ahead.
Thank you for taking the question. Sir, your yarn segment has now been completely upgraded to value-added yarn. So, what would be the difference in margins between the two, that is your value-added and conventional yarn?
The value-added and the conventional, today's market is for value-added yarn. Sir, we are in conventional yarn, it is difficult to sell. So, today market has improved to value-added yarn. The selling a conventional yarn is difficult today's day. Maybe 2-3% difference will be there.
Okay. And sir, I wanted to know the difference, in terms of margins, how much margins, higher do we make in this value-added yarn? Would it be possible to get this number?
It's about 3% plus would be there, sir.
Okay. And sir, can you provide the garment segment volume numbers for the quarter and also for yarn and fabric segment?
Yeah. Yarn production 22,379 tons.
And for fabric?
Fabric 6,600. Garment 32 million.
So garment we have really done really well in this quarter.
Sales,
Okay.
yarn for 15,000 tons, fabric 3,000 tons, garment is about 27.6 million.
Okay. Fine, sir. And could you also provide the yarn and fabric sales separately, the revenue numbers?
Yarn sales, you want value?
Sorry to interrupt you.
Value, yes.
You want value?
Yes, sir, value.
Yarn is about 462 crores, fabric is about 95 crores.
Thank you, sir. I'll just join in the question queue for further questions. Thank you for answering.
Thank you.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. My question on the other operating income decline in this quarter. So, compared to the last quarter, 57.4 crores to 33 crores. So, can you explain the reason of decline in the other operating income?
Only in the last call also, we have accrued the export receipts announced by the central government for 9 months in the last quarter. That is from 1st of January to 31st of September. So 9 months export benefits were accrued there. Actually, the actual benefit is about 15 crores. We have accrued 45 crores in the last quarter. This quarter, actual export benefits are accounted. This is mainly because of the government notification. Government notification was pending for quite some time. They announced only in the last quarter.
Okay. Secondly, in terms of gross profit margin of our yarn and garment segment, they are stable quarter to quarter. How is the movement in the margin, gross profit margin in these two business segments?
Yarn and fabric margin is about 20%. Compared to last quarter margin of about 28%. Last quarter margin mainly higher because of the inventory we are carrying at a lower cost.
Okay.
And the garment margins are more or less stable. It's about 29%. Sugar margin is about 23%.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking Limited. Please go ahead.
Good afternoon, sir. Sir, regarding the new capacity that has started operation, just trying to understand as of today, how much capacity would be filled up in terms of percentage?
You are asking about garment capacity, right, sir?
Yes, sir.
Garment capacity, we have commissioned during the end of last quarter. It is in ramping up. There is we have installed about 30% of the capacity. It is slowly ramping up. We hope that we will ramp up somewhere around 25% during this quarter.
Okay, 23% during this quarter. Okay, sir. Yeah. That's great, sir. And sir, I missed that on that margin, but just trying to understand in this quarter, what would be your EBITDA margin in different segments, like in yarn, garment, and fabric and sugar? I just missed that.
Spinning yarn and fabric is about 20%. Garment is 29%. Sugar is 23%.
And are these margins going to be the new normal, or you think these margins? Are these margins at this level would be steady and the new normal, or these margins would change depending on the market situation?
So generally, yarn margin used to be about 17 to 20% depending upon the season. So we feel it is a normal margin. The garments market is very good. So we hope that the margin will be little higher only.
Okay.
Sugar is a normal margin.
Okay. So, sir, I in the previous Concall, I don't know, correct me if I'm wrong, sir, you mentioned garment margin to be in this 25%. But last quarter and this quarter we are saying heightened. Is it because of some rebate, government rebate, or on its own 29%. There is a margin expansion in garment business.
It's not like that. It is basically the garment market is doing really well. The order flow is very good. Margins also improved.
Okay. And one final question on this. What would be the order book in garment as of now?
Somewhere around 1,000 crores now.
Oh, that's great. I'll come back in the queue, sir. Thank you, sir.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Tanvi Jain from Hem Securities. Please go ahead.
Hello, sir. Congratulations on a good set of numbers. I just had a couple of questions. First, could you just explain the margin bit? Is it purely on account of the inventory gains that are not there in this quarter and the ROSCTL benefit that is not there in the quarter? Are there any other reasons of our margin fall?
Basically, madam, first reason is ROCTL we have accrued for 9 months last quarter. That is the main reason. Second is the inventory gain we had in the spinning business.
Okay.
Yeah. Both contributed the higher margin.
Okay. Just one more thing. I just wanted to just confirm that in September 21 you said you had an order book of 750 crores and now you're telling me it's at 1,300 crores, the garment order book. So from where are such, the order book is almost doubled. So
the order book is about 1,000 crores.
Sorry?
And compared to last quarter order book of about 750 crores, now it is about 1,000 crores.
1,000 crores?
Yeah.
Okay. So what is the reason of such a sharp jump?
Since we have commissioned the new factory, we are going into the little higher order because we need orders for the new factory also, no?
Okay.
Yeah.
Okay. Just one last thing.
I'm sorry to interrupt you. May I request you to speak a little louder?
Oh, okay. Any guidance on your revenue for the full year?
We have reached the revenue of about 3,375 crores. Another 2 months is there. We hope that it will be in proportionate. We could not tell you the future number.
Okay. And so just one last thing. Can you repeat the volume numbers? Your voice is not very clear. The volume for the production volume and the sales volume. Earlier you had quantified the sales value. If you could give us sales split in terms of garment, yarn, fiber and sugar, volume wise.
Volume you want?
Yes, sales volume.
Okay, 15,000 tons yarn.
Okay.
3,000 tons fabric. 27.6 million garments.
So 20?
7.6 million garments.
Okay. So the sales have decreased in garment because in September 21 we had a sale volume of 37 million, which is 27.6 million this quarter.
Last quarter, 26.8 million is last quarter sales, madam. First quarter sales is 28 million. So some shipments are in the port, so those shipments will not be counted for sales purpose.
Sorry, you said that 37. It is not 37 million for last quarter. It was 26.8 million. Is that?
Last quarter is 26.8 million.
Okay, which has now 27.6 million.
Yeah, got it.
And your yarn volume has also declined from 18,500 to 15,000 tons.
Last quarter we had some stock that was liquidated. This quarter actual production has sold.
Okay. And can you also specify the production volume once again?
Yarn 22,379.
Okay.
Fabric 6,600.
6,600.
32.1 million.
20?
32.1 million.
Okay. So why is the garment production volume declining despite of a new facility coming up?
It's not declining, what? It's increasing.
It's at 22.12 million.
32.21 million.
Okay. Oh, okay.
32.21 million.
12 million. Oh, okay.
Okay.
Yeah. Thank you.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Ashutosh from Ambit Portfolio Management Service. Please go ahead.
Hello.
Yeah, tell me, sir.
Yeah, hi. So just wanted to understand a couple of things. The ramp up of this garment capacity, by when do you expect this ramp up to be completed?
Sometime in September, October, sir.
September of 2022, you are saying, around that.
Yeah.
Okay. And also, if you can throw some light on the ethanol production, I presume the machinery was expected by the end of November, December. Has that come in, and how is the production looking for this particular quarter? I mean, has the production started for ethanol?
The new plant, the ethanol production yet to start there. We are running the sugar mill on trial basis. We have applied for the approval and all. We are waiting for the approvals for running for the commercial production.
So would it be? Would then be the case that we will see ethanol contribution from next quarter onwards and not this quarter, basically?
We hope that it will come from this March onwards. As you said, full production will come in the first quarter of next year.
Okay. Thank you, sir. Thank you, and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Gaurav Jain from ICICI Mutual Fund. Please go ahead.
Yeah, hi sir. Thank you for taking my question. Wanted your view on how is the cotton and yarn prices trading? As compared to December exit, whether the prices have continued to go up, and to what extent is it getting passed on in yarn, etc.?
Yes, sir. See, the cotton market is continue to firm, and the demand and supply almost continuing in the last 3-4 months. See, production is expected in India around 340 lakh bales, and the consumption almost matching for the production. And because of the import duty on 11% on cotton, so import has come down. This is so far approximately around 10 lakh bales, and export have happened already around 30 lakh bales. So with all these, when we see the with opening stock of around 60 lakh bales, so the total arrival so far is 180 lakh bales in Indian market. But in the same period last year, it is around 260 lakh bales. So there was a difference of 80 lakh bales. The arrival has to come, so the cotton is with the farmers. So we hope that the season will extend from March, maybe next 3-4, so another 2-3 months. So that is cotton is arriving slowly into the market. So that is the reason, as consumption also has gone up, the market holding the price at this level, as well as international price also ruling high. So we hope the present situation will continue at a high price of cotton. So today it is around somewhere 78,000 to 80,000 rupees per candy. So we have to wait for the new season. So we hope that for next 2-3 months the same situation will prevail, unless something happened like the government policies like removal of duty, something like. And when the cotton price is firm, the yarn price also moving in the same direction. It's also firm. So this is the present situation.
So basically, will it be fair to understand that yarn has moved completely in tandem with cotton, or will there be some lesser
Yes, sir,
increase?
in tandem with cotton. You are right. The yarn price also going up in line with cotton.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Venkat Samla from Tata Asset Management. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Sir, my question is with respect to margins. I understand QOQ, our margins have kind of declined, but at the same time, our margins continue to be much higher than what we used to do, say, pre-COVID levels, right? So in light of the higher cotton prices, how do you see the margin pan out in Q4 and Q1 FY23?
So if everything goes well, we can maintain around 20% kind of a margin. In yarn and fabric, garments are doing well only. The margins is expected to be around this level.
Right. Okay, sir. So this garment margin, could you give some more color as to why we are doing better margins than what we used to do historically? Because earlier 24% we used to do, now 29%.
Very good, because maybe because of the China plus one kind of a policy, the buyers have one more sourcing destination, and so the price levels are little higher. That is one reason. Second, after this COVID, especially US and the European clients wanted to increase their sourcing from other countries. So it helps us to increase our order flow with a better margin.
Right. So, sir, this increase in margins, is it because of a better mix, or because are we kind of getting some kind of pricing power? Because, we are among the very few players, larger players in India wherein, there is higher predictability and we are completely integrated end to end, right?
Yeah, the integration will give higher margin because the dependability is not there from the other people. So we buy cotton and we supply garments. So that advantage we have. Because of that, the margin should be higher than the other people. And the orders also we can supply a very large quantity. So for that also we are carrying some premium. Because our capacity is one of the largest in India. We can supply large quantity.
Right. So just to understand this a little further, are we commanding some kind of pricing power here?
It is not like commanding pricing power. Since we have a complete integration and the larger capacity, the buyer themselves agreeing for a better price. It is not completely commanding. You can ask for little more price than the other people.
Okay. And this you think is kind of sustainable?
Yeah, sustainable.
Okay. So then, previously we used to, guide 22% kind of margin levels, right? At a console level. So do you think now we can expect higher margins than that? On a sustainable basis?
So the margin, once we go for integration, the margin levels will improve. We hope that the new garment factory come into production with 100% capacity, the margin levels will improve.
Right. So 24% we can kind of sustain and improve. Is it? Is that the way to look at it?
Yeah, 24% is doable.
Okay. Understood, sir. Thank you. Thanks a lot. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Mr. Desham Jain from DSP Investment Managers. Please go ahead.
Yeah, hi. Good evening, sir.
Good evening.
And congratulations on good performance. So I have 3-4 questions. So first is on the garmenting expansion and the ramp up, are we selling the new capacity to the existing set of customers, or are we able to rope in new set of customers also? Because earlier our portfolio used to be largely Europe and UK, or rather large part, is there more diversification happening there?
Yeah, basically, the initial ramp-up will be to the existing customers only. We are also in the process of finalizing the new customers. They will come in the later stage, maybe after 3-4 months kind of a thing. Initially, we will go ahead with the existing customers. As of today, the market share is little different. Europe, we are somewhere around 54%, and US is about 20%, and Australia is about 20%. Other areas is about 10%.
Okay, understood, sir.
Yeah.
So the second question is on sugar. What will be our total ethanol production once the new capacity will come into production? What will be the total number of liters will be manufacturing ethanol?
In a good year, we may produce somewhere around 10 crore units.
Sorry, sir? 10 crore liters?
10 crore liters, yeah.
And sugar, sir? Total sugar saleable quantity can be how much at the peak?
About 2 lakh tons.
2 lakh tons. Okay. And sir, with this ethanol of 10 crore liters and 2 lakh tons, what will be once everything will commission fully? How much revenue and margins one should expect from the new from the total sugar division, including the old one?
Revenue somewhere around 1,200 to 1,300 crore.
Okay. And margins, sir?
As stands today, it will be somewhere around 20 plus kind of a margin.
20% plus?
Yeah.
Okay, understood, sir. And sir, last question is on the capex. You have already commissioned 2 large projects, sugar and garment, and probably next 6 months' time it may get commissioned and normalized. So, any capex plan beyond for FY23-24?
23-24, sir, we have not decided. We don't finalize the project for 2-3 years. Generally, we finalize the project for a year. This year, we have completed the capital expenditure. We may decide it in the first quarter of next year.
Okay. But any tentative plan, sir, in terms of in which segment we are going to do? Is it going to be garment?
Textile, what we are thinking of, and the textile park scheme we are waiting for, whether it is coming during this quarter or not, we do not know. Otherwise, we will take a call.
Okay, sir. Great. Thank you very much, sir, and all the best. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Samir Dosani from Carnelian Capital. Please go ahead.
Am I audible?
Yeah, you are audible.
Sir, wanted to know your thoughts around whether KPR is going to apply for the PLI scheme, and what is going to be our, what is our plan around that?
We are discussing with a few consultants for applying that, sir. We not yet decided. It is in advanced stage of discussion.
But this is not going to be your cotton side, right? This is going to be on the technical and man-made fiber side, and which is something which we don't do currently, right? So this would be something
we can do. We are discussing with them. We are not very clear on it. We are discussing with the consultants.
Okay, fine. That's it from my side.
Thank you.
Thank you. The next question is from the line of Nirav Savai from Abacus Investment Advisors. Please go ahead.
Good evening, sir, and thanks for the opportunity. Sir, in the garmenting segment, sir, what portion would be fully integrated? As in, what would be the in-house fabric which is required in garmenting?
Sir, in-house fabric required in the garment will be somewhere around 20,000 tons.
About 20,000 tons. So in percentage terms, would it be what, 80-90% or higher than that?
100%.
100%. Right. And this margins, what you talk about at the 29% margin is also taking into consideration the fabric integration. So that's how the margins are much higher, right?
No. So fabric, yarn and fabric division kept separately. So each division is a separate profit center. We don't mix the profit with the other segments.
Okay, so it's at arm's length, but only garment segment is 29% margin. Fabric margin goes in the fabric segment, and that's where it's calculated.
Yeah.
Right. And sir, what portion of your factories would have this dormitory kind of a structure where employees can also stay and work simultaneously, right?
Yeah, our factory is not dormitory kind of setup. It is like a hostel kind of a setup. We usually have rooms for the people. People stay in a room.
So you're saying all the factories have that kind of a hostel
kind of a setup? Yes, because we are providing education to the worker who are working with us. And it's one of the best data practices follows in the industry. We provide education to them. So we follow the hospitality kind of a thing, like in colleges.
So this is what all factories have, this hostel kind of a facility?
Yeah, all the factories.
Okay. And so what are the total number of factories which you all have in the garment space?
We have 3 garment factories.
Okay.
And the new one is commissioned now. It is along with that, it is 4 garment factories.
Okay. Oh, that's it from us. Thank you.
Thank you. The next question is from the line of Vinod Malviya from Union Mutual Fund. Please go ahead.
Yeah, thank you for taking my question. So just a couple of questions. First on the ramp up. So I just wanted to clarify this. You said that the garment facility is an additional 42 million pieces of capacity which you have added will get completely ramped up in FY20. So you will do 23. You're talking about 100% utilization of this incremental capacity.
The garment capacity generally takes about 9 months to 1 year for ramping up. We hopefully ramp up in sometime in September, October times. And the full capacity running will come in the 2022-23. 23-24. 22-23 we will have a portion of the year with the full capacity.
So okay. So one should expect 150 million pieces of volume sales probably in FY24 when the entire.
24, correct.
Okay. And just second, related to this now, wanted to understand your long-term process over here. Probably in FY24 you will have 100% utilization level in the garment capacity. So from a long-term perspective, what is the thought process of the management, like where they really want to put the capital? Is it more towards the yarn, fabric, or garment, or any new verticals which you are looking at? You can just give your thought, not exact precise number, but just a broad idea about or ideology, like what is really KPR working towards.
Actually, in the long term, we would like to concentrate more on the textile segment, not specifically on fabric or garment like that. We want to concentrate on the textile segment, including the retail segment also.
Including the retail segment also. Okay.
Yeah.
And just last thing, just last clarification. You said that internal capital consumption of fabric was around 20,000. This is for the current volume or once the entire ramp up happens?
Once the entire ramp up will happen.
So that would be 20,000 tons of fabric will be getting captive consumption.
Yeah, it is. Definitely.
Oh, okay. Okay. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Sanjay from Ampersand Capital. Please go ahead.
Hi, sir.
Yes, sir.
You have already mentioned that current margin is sustainable. Hello?
Yeah, tell me, sir.
Yeah. And you are also saying that cotton is kind of supply is fairly kind of balanced, that there is no oversupply or undersupply. Can you just tell us something about the yarn side, that how the industry is in terms of utilization and whether there are what kind of capacity build-up is happening there?
Well, actually, the current capacity is about 50 million spindles. And it is expected to grow by about 2 million spindles in the coming year. And subsequently, we have to see, because spindle age generally will not go up sharply. It depends upon the profitability and other things. And next year will be somewhere around 52 million will be there. As it is, we are supplying about 30% requirement of the world market in yarn. So we are already having enough capacity, and the additional capacity is coming up because of the market requirement.
Because of what, sir?
Market requirement, and the additional requirement from the buyer.
Okay. Okay. So the net what your data point is suggesting that this industry, which is to be fairly cyclical in terms of demand as well as margin, is probably entering a period of lesser volatility, which is a structural change. Is that what we can conclude? Because normally cycles just happen. You cannot really predict. So I'm just trying to get a sense on that basis.
Sir, actually, as you said, it is a cyclical industry only. But we feel this time it is a structural change kind of a thing, because cyclical happens when the prices fluctuates within 2-3 months time kind of a thing. Now the prices are firm for last 7-8 months now. So it continues to be strong because we are maybe reaching the end of the season. Maybe as indicated in May, the season extended by another 2 months. The prices are very firm. So we feel it is a structural change. And because of the ban by the US and Europe for this Libyan yarn, Libyan cotton, which is about 15% of the world cotton production. So the Indian cotton become more required in the international market.
And so from your side, are you looking at sustaining a volume growth of 8-10% each year through continuous capacity addition on an overall basis?
Yeah, we hope.
Understood. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah, thanks for giving me the opportunity. Most of the questions are answered. I just have one question on how is the demand environment, currently in domestic as well as the key international market where we have a good presence.
Yarn, sir. Yarn market is very good. The domestic market is very good. International market also good.
Yeah. So the current third wave or the disruption because of the supply, will it not have any impact on your near-term performance issues? So you say that the growth level in all your key textile verticals would sustain in the coming quarters?
Sir, I could not able to hear you.
Is it better now?
The voice is breaking, sir.
Just a second.
Kaustubh, can you hear us? No response.
Is it
for the next participant? The next question is from the line of Kashyap Javeri from MK Investment Managers. Please go ahead.
Hello. Hello.
So you're audible.
Yeah, am I audible? I just wanted to recheck. You mentioned about margins in yarn, fabric, and garment separately. I just missed out on those numbers for M9 this year and last year.
You want this year and last year?
Yes, for the 9 months.
For the 9 months. I will tell you later, sir. You go ahead with other questions.
Sure. That's the only question from my side.
Yeah, I'll get back to you in the moment.
Thank you. The next question is from the line of Shraddha from Asian Market Securities. Please go ahead.
Yeah, hi, sir. Thanks for taking my question. Can you give us some sales volume number for sugar and ethanol in this quarter, and what is the inventory you're sitting on currently?
Yeah. Sale volume of sugar is about 43,000.
Okay.
1,000 tons, and ethanol is about 70 lakh liters.
70 lakh liters.
Yeah.
And inventory in sugar, how much do we have?
We have about 21,000 tons.
Sorry, how much, sir?
Ethanol, we do not have much of inventory, one day production.
Sir, sorry to interrupt you, your voice is echoing. May I request you to speak a little louder towards the phone?
Yeah. We do, sugar is about 21,000 tons, and we do not have much of ethanol. The ethanol is fully sold.
Right, sir. And I could not catch one thing. You said the new garmenting capacity would ramp up by what extent next quarter?
Next quarter will be somewhere around 50%.
50%. And full ramp up is by FY24, you're saying, right?
Whole ramp up will happen sometime in September, October 2022.
22. Okay.
Yeah.
Sure. Thank you.
Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Prerna Jhunjhunwala from B&K Securities. Please go ahead.
Hello.
Yeah.
So just wanted to understand on the cotton procurement strategy in light of currently high cotton prices. What will be your strategy this year? Because it's a very different year than a normal year.
Since the prices are highly volatile, so we are holding only 3 months stock.
Okay. Okay. And what is your strategy?
We are slowly buying for the requirements.
Okay.
We would like to maintain about 2.5 to 3 months stock for the year.
Okay. Okay, understood. And sir, could you help us update on the retail brand sales and demand scenario that you are witnessing now, and how is your reach improved there?
The retail business is picking up now. Last 3 months only it is picking up now. We are pushing it. We will inform you once it reaches a reasonable level of turnover and profitability.
Sure, sir. But the demand is very good, and how is
it good, and now we are pushing it very hard.
Okay, sir. Okay, thank you so much, sir.
Thank you. Sir, the Kashif Javeri has asked about the 9 months margin in 2021 and 2022. Yarn margin for 2020 is 20% and 2022 is 25%. Garment margin for 2021 is about 28% and 2022 also 28%. Sugar margin also around 20%. This 9 months also 20%.
Thank you very much.
Okay, you can go ahead.
The next question is from the line of Gaurav Jain from ICICI Mutual Fund. Please go ahead.
Thanks for a follow-up opportunity. Just wanted the gross and net debt number as on December 21, sir.
Yes, sir. Gross debt is 810 crores.
Yes, sir.
Sorry, 967 crores. And the net debt is about 344 crores.
957 and 344, right, sir?
Yeah.
Okay, thank you, sir. That's it.
Thank you very much. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Ranjit from Mahindra Manulife Mutual Fund. Please go ahead.
Yeah, hi sir. Congrats on good set of numbers. Just wanted to get some idea, like this Xinjiang ban has actually helped all the textile manufacturers. So we have also seen such kind of cotton cycles a couple of times before. So do you think that this ban and this uptick is kind of a sustainable for the next 3-4 years, or is there any risk in terms of the ban getting revoked and Xinjiang and all those areas going back on action? So I know that it's a very futuristic thing, but what is your sense of the whole issue, which is actually helping us currently?
Well, we feel the situation may continue for some more time. We don't think it will be revoked immediately. So we feel these things will be there for some time.
Okay, and in terms of this, the benefits of FTA, like how much do we currently export to UK, and what is the sense that if that FTA goes through, then what kind of revenues or the growth uptick can we expect?
We are exporting about 54-55% to Europe. If FTA happens, it will be boost to the Indian exporters. For especially KPR, it is one of the best opportunities for KPR.
Okay, how much will be UK in that?
So not specifically UK. The overall Europe is about 54%. UK may be somewhere around 10%.
Okay, so if there is a probability of this FTA going through, that can be kind of, you can probably double your size in that. Will that?
Yeah, we can increase the size.
Okay. Okay, sir. Thank you so much. Yeah.
Thank you. Thank you.
Thank you. The next question is from the line of Akshay Chheda from Canara Robeco Mutual Fund. Please go ahead.
Sir, just wanted your updates on the Ethiopia business. I mean, any progress there, or we continue to face challenges there?
The domestic interest is still going on, and the unified between the two regions is still there. We could not be able to commence the business in Ethiopia. We are waiting and watching. We are requesting the Ethiopian Investment Commission to help us to do something. We are not getting any positive response as of now. We hope that the things will improve in the coming period.
Okay, sir. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Navin Vijay from NS Capital. Please go ahead.
Good evening, sir. Thank you for a good set of numbers. I just wanted to get a feel of the active customers for exports. How many customers do we have currently live, and what is the share of top 5 customers?
Sir, we have about 55 customers now for exports in garments. The top 5 customers will be somewhere around 40%.
Any new customers added this quarter, sir, due to expansion of the new factory?
The new factories, we have done a few samples and other things. We are about to finalize few customers. Maybe another 3-4 months we may confirm once the ramping up is reaching to 50% levels.
Thank you, sir. My other question is regarding the FASO retail segment, sir. Any store opening numbers that you can share that is planned immediately, sir?
So now we are not opening any own store. It is sold through a retail channel. Currently, about 3,000 retail stores selling our product. We wanted to reach somewhere around 10,000 stores.
Thank you, sir. Very helpful, and congratulations again. Thank you, sir. Very helpful.
Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking Limited. Please go ahead.
Thank you for taking my question, sir. Just on the follow-up.
May I request you to speak a little louder?
Yeah. Thank you. Sir, just a quick query. On this ramping up of your garment business, earlier you have given us the guidance that it normally takes 6 months or so to fully ramp up the capacity. Now we are seeing a little more than 6 months, maybe 8-9 months or so. So is there any issue in getting the requirement skill level, or it is this is the normal 8-9 months is the normal time for ramping up such a capacity?
Sir, the factory being large, we need to train the people. We cannot train the people at one go. We have to train in batches. Maybe 500 people per batch. We need about 6,000 people. We need to train them for about 3 months. 1 month offline, 1 month online, and 1 month regular training. Like that it is going on. We have already in the process of training the people, 3-4 batches already in the process of training. 1 batch already started working in the factory. So it's 9 months, 8 to 9 months is normal. Actually 8 to 9 months is a little hard, but we are trying to reach in 8 to 9 months time.
Okay, so this is normal. That is what you are saying. Okay, sir. And I missed that. If you can give again, repeat that. I missed it. That the total supply, net supply in India this year is around 180 lakhs bale in cotton, and last year it was 260 lakh bales, and absorption is also around 260 lakh bales. Could you just again elaborate on that? I just missed that. Consumption, cotton consumption supply in India.
Yeah. Yes, the production almost the same like year on year, and consumption this year with a little bit increased. So expected like 330 lakh bales, and the arrival is little slow from the farmers. So that's why last year by this time around 260 lakh bales has arrived in the market, and this year only 180 lakh bales has come. So that means the coming into the market from the farm is little slow. So that is also one of the reason why the price is is holding at this high level. Maybe because of maybe as farmers also bringing it little slowly to retain the price at this level. So that's why that generally the industries also expect that when the season means arrival will complete by March like that. So this may extend for another 2 to 3 months. So this is what the general situation prevails now.
Okay, so just my understanding is that there is no significant demand mismatch. It's just that the arrival is little bit late this year. Normally last year the arrival was 260 lakh bales. This year it is around 180 lakhs bales. So the situation would significantly improve, expected to improve by March 2022. That's what you are saying, sir.
No, here the production is the same, and consumption has gone up little bit, and import was the last year was around 30 lakh bales because of the duty of 11% on cotton import. The import has come down. So that's why the industry fear is that at the end of the season, if the cotton is not available, as the consumption has increased a little bit and import has a little bit slowed down, so around there will be a mismatch of like some 30-40 lakh bales. So that we will come to know only end of the season. So that creates a panic in the industry. So that's why everyone is concerned. So that's why it's also requesting the government to remove the duty. So that's what the present situation.
Okay, sir. Thank you, sir. That's all. Thank you.
Thank you very much. The next question is from the line of Kapil Jagasia from Edelweiss Financial Service. Please go ahead.
Thank you for the follow-up, sir. I just needed the breakup between the sugar and ethanol sales for this quarter.
Yeah. Sugar sales volume I already told you, it is about 42,000 tons, and production is about 52,000 tons. And the value of sugar is 136 crores. Ethanol production is about 71 lakh liters, and the sales is 70 lakh liters. Value is 45 crores.
Okay. Fine, sir. Thank you so much.
Thank you. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of M.S. Rajasekhar, an individual investor. Please go ahead.
Good afternoon, sir. Mr. Natarajan team, you're doing an excellent job, giving an excellent results. At the same time, you're also doing a good social work in educating all your workers, all your people coming to you. Excellent job, sir. My question is, the cotton prices are at the peak, so the yarn prices are also going up. Same time, the fabric prices and then the cloth prices are also going up. So the end customer has to pay for an increased price of the cloth and the fabric, or for the end product. So is there demand still because the prices are up? Is it because there is less supply in the market, in the world market, or because there is a good demand for the Indian products? I just want to understand that, sir.
So I can say that it's a good demand for the Indian product because another thing also, if you see the cotton price, internationally much higher than the Indian cotton price. So that is the reason it's a good demand for the final product from India.
Okay, sir. Sir, you are putting up the new garment facility, which is going to be commissioned in this year. What is the turnover you can expect from this facility, sir?
With the full capacity running, we can reach somewhere around 600 crore of turnover from this facility. We already commissioned this plant. Commercial production has started. We are ramping up the product. As you know, the ramping up is required in the garment factory. It may take about 8 to 9 months' time. We hope that we will reach full capacity sometime in September, October of 2022.
Okay, sir. Thanks, sir. This is all from my side. All the best for an excellent and a bright future, sir.
Thank you. Thank you, sir.
Thank you. The next question is from the line of Chinmay Shah, individual investor. Please go ahead.
Good evening, sir. Thanks for the opportunity. I have two questions, sir. Sir, as you said earlier, the cotton rates are around 70 to 80,000 per candy, right? So, yes. Sir, will you be able to maintain the margin for the next 2 quarters of the same?
So hopefully, sir. If you are asking about the future, we hopefully think that this margin can be maintained.
Okay, and sir, as you said, we are keeping 3 months of inventory, right, sir? So how much time it will take to pass on, from procuring the cotton to, how much time it takes to pass on the prices?
Sir, generally 1 month's time, sir, we pass on the price increase to the customers.
Okay. Thank you very much, sir. Thank you very much. That's all.
Thank you.
Thank you. The next question is from the line of Venkat Samala from Tata Asset Management. Please go ahead.
Hi, sir. Thanks a lot for the opportunity again. Sir, I understand you've not really taken a call on your new unit, but broadly, how should we think about it from FY24 standpoint? What would you be looking at in terms of commissioning timelines in FY24?
Which one, sir?
Whenever you take a call on the new factory, right? So the commissioning of that new factory, what should we kind of assume?
It's a garment factory or a processing factory or a spinning factory, we have to decide. The decision not yet taken. It depends upon the factory.
Right. Okay. And the reason that I ask is that, by September 2022, as you said, we will be completely ramping up our garment facility, right? And sugar facility, more or less, it will not take so much time to ramp up. So therefore, I'm just trying to understand, from FY24 standpoint, we would largely, while entering into FY24, we would largely be running full capacity utilization levels, right? Across all the units. So then how should we kind of model growth in FY24 from that standpoint?
Sir, 2024 garment production will be somewhere around 150 million. The prices and all we have to wait, sir.
Okay, sir. Sure, sir. Thank you. Thanks a lot.
Thank you. Next question is from the line of Naushad Chaudhary, individual investor. Please go ahead. Naushad, may I request you to unmute your line from your side and go ahead with the question, please? Naushad, can you hear us? Due to no response, we move on to the next participant. The next question is from the line of Sandeep Raman, self-employed. Please go ahead.
Hey, hi. Good afternoon, Mr. Natarajan sir. I've been an investor on your firm since the IPO days. I have a query more on your strategy of retail. I understand, our strategy is to go into retail where the margins are high. Your top competitor has around 8% of their sales coming via the online channel. So what's your current spend on IT, and what's your strategy in terms of growing online in terms of households?
So online, we are also going through online. Our turnover will be somewhere around 15% through online. We hope that we are in a very preliminary stage. We will be more pushing through online also. Basically, we are looking at 10,000 shops first target and online along with that.
Okay. So last time you had mentioned about hiring a consultant to help you out with this process. So is that done, and you have certain timelines to complete that process with the consultant?
The 10,000 stores we are targeting in 2023 March.
Okay. So the last question I have is, I just want to understand your model in terms of contracting with customers. Those designs that are done, are those done in-house, or those designs are given by customers?
Both are happening, sir. We are also having a design studio. We also develop designs, and they also develop designs. So whatever is required will be produced.
Okay. Will there be any conflict of interest when we are in retail as well as contract manufacturing?
It's a contract manufacturing only. We develop a design and give it to them. If they are okay with that, if they want some modification, they will do, and they will produce accordingly.
Okay. Thank you, sir.
Thank you. The next question is from the line of Marshall, individual investor. Please go ahead.
Yeah, my question is regarding the new subsidiary of the name KPR Sugar and Apparel Limited. So, as you mentioned during this call that you are in the process of getting approval to start the factory, to start the commercial production for the factory. So, can you please explain that whether the equipment for all sugar, cogeneration and ethanol have been installed and commissioned, or only sugar is finished now? So, by what is the timeline to commence the production from all three segments, sugar, cogeneration and ethanol?
So during this quarter, we will do all the things. We already started sugar and power. Ethanol, we are waiting for the approval from the central government.
Okay, so this sugar mill is in which district, and what is the cane availability? So sugar cane is available till which month?
Yeah, it will be available up to March. The new factory will be available up to March.
So it means we will lose the season then?
Yeah.
It means we will lose this sugarcane season?
Yeah, this season we may not do crush 100%. We may reach about half of it.
So means like when did the production of sugar and cogeneration started from this factory?
Yeah, trial production is going on from the new factory. We have not reached full capacity because it's a larger capacity. The trial will take some time. It's about 1 month, 1.5 months time it will take. Once it's fully done, we'll go ahead with the full production.
So you are saying that this commercial production from the new sugar mill has not yet started?
Commercial production not yet started. The trial run is going on.
It means we lost because, like, I read your this press release of 18 December 2020 when you said that this will be commissioned by October 2021. So basically, sugar cane is available from October to March, April. It means we lost this full sugar year because of delay in this commissioning.
The delay is mainly because of the COVID pandemic started during this year. That delayed the project a little bit, and also there is a heavy rain in this region also hampered. Otherwise, it would have started some 2-3 months earlier.
So, in that release of 2020, it was mentioned that we have made this, we have incorporated new subsidiary because of the tax benefits. So, what are the tax benefits which will be available?
Not audible, sir. Can you repeat? Your voice is breaking.
Okay. So in December 2020, tax release was mentioned that this new subsidiary will also be eligible for tax benefits. So can you please
it's only eligible. Up to 2024 it is eligible.
Sorry?
So the government has allowed up to 31/3/2024. If the factory is commissioned, it is eligible. We will commission it during this quarter itself. Already we have started the trial production. The commercial production will start sometime during this quarter itself.
Thank you. Sorry to interrupt you, Marshall. I'll request to come back in the question queue for a follow-up question. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Saminathan, individual investor. Please go ahead.
Hi, sir. Thanks for the opportunity. My question related to the new facility depreciation. Have you taken that into consideration already for both garments as well as sugar ethanol plant?
So to some extent, garment factory depreciation is taken, and it will be the full depreciation will be taken during this quarter only. And sugar, we have to commission the commercial production. It will be considered during this quarter.
Okay, thank you. My next question is, in terms of the human resource and the labor availability for the new garment facility, is that all lined up or having any challenge you foresee? Can you give some detail on that?
We are in the process of recruiting people. We feel we may not have any problem in recruiting people, required people.
Okay, thank you, sir.
Thank you. Next question is from the line of Aditya, individual investor. Please go ahead.
Yeah, hi. Thank you for taking my question.
Thank you, sir.
Yeah, hi. My question is, revolves around, over the last 1.5 to 2 years, due to a lot of pent-up demand, people are, shopping in Europe, where you predominantly export to. So how do you see, demand going forward? Because in the US, where you don't export much, or rather you don't export at all, demand has started to fall. Gap and households with $75,000 to $100,000 income, which probably is our target market, has declined significantly, and Gap has just recently been downgraded by a lot of brokerages due to fallen sales. So I just wanted to get your sense that, how can things pan out going forward?
So at least the markets, we are in is growing because we are into the basic wear segment. Basic wear segment is going up because of this pandemic. Because of the rising prices, the replacement time has come down sharply, and the requirement is growing in this segment. Maybe you may be talking about the regular, the little high-end garments like and fashion wear or office wear kind of a thing. Regular wear segment is growing.
All right. Any plans on acquiring customers in the US?
Yeah, we are already giving 20% of our sales to US. We will get some more customers for the new factory. We hope we will be somewhere around 25% plus kind of market sales turnover to US in the coming year.
Okay, thank you. That's all.
Thank you. The next question is from the line of Rajiv Venkatesh, individual investor. Please go ahead.
Hi, sir. Vanakkam and Happy New Year to all the KPR family. Sir, I have a couple of questions. Do we have sufficient land in case of any greenfield expansion for ethanol, since we are completely sold, as you said? And there's another question. Many sugar companies have recently set up distilleries and are venturing out into Indian-made liquor. Does our management think something on these lines, sir?
We already built an ethanol facility, so there won't be a problem. And we immediately do not have any intention to produce distillery. That is ENA, that is sprit. We are not intending to produce.
Okay, sir. Thank you, sir. And how about our thought process on the textile mega parks, which was informed in the budget, sir? Any thought process on that, sir?
The announcement is to come. We are waiting for the announcement because government indicated that there are going to be 2 mega parks in Tamil Nadu. Not yet announced the area and the timeline and all. We are waiting for the announcement.
Okay, sir. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from Tanvi Jain from Hem Securities. Please go ahead.
Just 2 things. Also, I just wanted to confirm that for garment section, are we 100% integrated?
Yeah.
Even for the new facility?
New facility also.
And sir, one more thing. So the current cotton price have moved to 70 to 80,000. So is your new policy to maintain 3 months inventory?
Tanvi, sorry to interrupt, your voice is again breaking.
Sir, the cotton price have again moved up to say 70 to 80,000 per candy. So still your inventory policy remains at 3 months inventory of cotton? Hello?
Yeah, half of your voice is not audible.
Sir, your inventory policy of 3 months remain intact even though the cotton prices have increased to 80,000 per candy?
Yeah, we are maintaining it. Because ours is a very large price, we need some inventory backup.
Okay. Yeah, thank you, sir.
Thank you very much. I now hand the conference over to the management for closing comments.
So thank you. So overall, the economic indicators are showing positive signs of revival for the Indian economy. Recently, the government has announced various schemes to encourage the textile industry and is also pushing hard to conclude FTAs with UAE, UK, and Australia to explore new avenues to expand its export basket. With its inherent strengths and support from the stakeholders, KPR is marching ahead as a leading manufacturer in the Indian textile industry. Thank you all once again for participating in this call. Thank you.
Thank you very much. On behalf of Batliwala & Karani Securities India Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.